Tyler, what do we know so far?
Yeah. Hey, Katie. Well, President Trump had told us that we could expect 2 waves of tariff letters to go out today. He said that there would be a minimum of 7 letters sent out in the morning. So far, we've gotten 6, and the rates outlined in them are marginally different. Algeria, for example, stays even at 30 percentage points. Brunei drops 1 point to 24%. Libya also down 1 point to 30%. The Philippines is up 3 points to 20%. Moldova down from 31 to 25%. The biggest movement, the biggest drop is actually for Iraq, which is down from 39% to 30%. Of course, these are all comparisons to those original April 2nd rates that we saw unveiled, as this White House really does double down that this is the last chance for our trading partners to put their best offer on the table and negotiate with the U.S., as they say that the August 1st deadline is not going to get extended. Now, we are still waiting for additional letters today. Yesterday, President Trump told reporters that some of these letters might outline rates as high as 60 or 70%. Now, we haven't seen that quite yet, and we're still waiting for additional details on which of those trading partners that could impact. One of the key letters that we are closely keeping an eye on, Katie, is that yesterday President Trump did say that the European Union would be getting a letter in the coming days. Of course, our understanding has been that the trading bloc has actually been making progress towards getting some sort of framework agreement done. People familiar do tell us here at Bloomberg News that they are inching closer to an agreement in principle on those technical details that we could end up seeing emerge.
So we're keeping an eye, of course, on the communication to specific countries, and we knew that this week would be busy when it comes to that front. But let's also talk about sector-specific tariffs, because also in the Oval Office yesterday, President Trump did raise that specter when it comes to copper, when it comes to pharmaceuticals, for example.
Right, and this is really important because we have to keep in mind that sector-specific tariffs are going to be enacted under Section 232 on the grounds of national security concerns. So it's not necessarily surprising that we're hearing the administration ramp up their rhetoric when it does come to the sector-specific tariffs, because they had already launched investigations earlier this year, sort of setting the groundwork for these tariffs to go into effect. What we didn't know, though, was the timeline or the rate, particularly when it came to copper. So the fact that President Trump says that these are going to be enacted sooner than perhaps we were expecting, considering that these investigations typically take 9 months and they started it back in February, that really did come as a jolt. Not to mention that 50% rate. While that is in line with the tariffs that we're seeing on steel and aluminum, the baseline for sector-specific tariffs had been 25%. So perhaps that rate was also pretty surprising, as we really have seen a surge in copper imports in recent months as importers tried to get ahead of this. But it does appear that that window is now closing. And Katie, we do have to keep in mind that while we have these so-called reciprocal tariffs being negotiated, we really are starting to see those sector-specific tariffs come into the talks, even though they are totally separate tariffs enacted under these different provisions, which brings us back to the conversation about the European Union. No doubt they are going to be unhappy when they hear about how pharmaceutical tariffs are in the pipeline as well.